to distill down what is the purpose of what you and repeat it. And it's
you had a great life.
I had a great life, but I was very keen on that job because asset management. And I love came together in the same job.
Being cleverer than anyone else.
Why is that? You need to understand psychology. And then these things are changing. Fascinating game.
Let's turn the spotlight now to a company that's helping to fuel the clean energy transition. That is CF Industries. It's a Fortune 500 company and the world's largest producer of ammonia. Bloomberg's Abigail Jul has more.
And I wish I were a little bit more of a scientist, but I was just on their website, and it's really pretty fascinating in terms of clean energy using the Haber-Bosch process to fix atmospheric nitrate with hydrogen from gas to produce, I believe this is anhydrous ammonia, but in any case, it's for the clean energy. And here's a bit of a breakdown for their revenue pool per the Bloomberg terminal. The big chunk, or one of the biggest chunks, is UAN, or urea ammonium nitrate. We can also see granular urea, a big piece, ammonia, also about 27%. So here's a bit of a breakdown relative to the overall. If we were to take a look at the revenue, let's take a look at this bar chart here, and the estimate for the second here, $1.6 billion, very nice sequential growth, down just a little bit on a year-over-year basis, but again, with the sequential growth, it's really a nice trajectory. And then if we were to compare the clean energy space overall, let's look at what's going on here over the last year. You can see that CF Industries outperforming the clean energy index by, to some degree, both underperforming the S&P 500. So Katie, this gap here really creating a nice opportunity for CF Industries.
All right, Abigail, really appreciate that setup. Let's keep the conversation going now with Tony Will. He is the president and CEO of CF Industries, joining me in person. Great to see you.
Katie, thanks for having me. Pleasure to be here.
So like Abigail, I am not a scientist. So I'm hoping that you can just explain in layman's terms how exactly this works, this decarbonization.
Yeah, so I'm not a scientist either. Hopefully we can get through this together. Essentially, when you're making ammonia, you're using natural gas and air, and then the byproduct is CO2. So we just signed a record-breaking deal with ExxonMobil where we're going to capture that CO2 and begin sequestering 2 million tons of it a year beginning next year. We're going to try to replicate that exact same initiative across a number of our other plants, and then we're also in process of eliminating N2O, which is a potent greenhouse gas that comes off of some of our processes on nitric acid plants, and a variety of other smaller initiatives. But we have a goal of 2050 to get to net zero, and 2030 to reduce our total emissions by 25%. And I'm really happy to say that we are well on our way to achieve that intermediate goal.
And so how do things such as the U.S. Inflation Reduction Act and, of course, subsidies for decarbonization, how meaningful are they to you?
Yeah, it's absolutely critical. So we operate in what's commonly referred to as a hard-to-abate sector. We're energy-intensive, trade-exposed, which means we're generate quite a bit of greenhouse gas emissions. And having some support from government initiatives to help us go about making the necessary capital investments to decarbonize our production platform is absolutely critical. We wouldn't be able to compete on a somewhat unlevel playing field with some state-supported companies out there without legislation like the IRA.
Yeah, that makes a lot of sense. And of course, you mentioned a partnership with Exxon. What other upcoming partnerships, projects are you eyeing at this juncture?
Yeah, so we also have an existing partnership with BP. We're buying certified low-slip methane from them, which means we're reducing methane emissions. Methane is also a very important greenhouse gas. And we've recently signed deals with both Mitsui and JERA Corporation. JERA is the largest Japanese utility company. And what JERA is focused on is displacing coal production or coal burn to produce electricity using clean ammonia instead. So they can reduce their greenhouse emissions by about 20%, possibly moving up to 50% over time.
So we're talking about, of course, natural gas to ammonia. That conversion, as I understand it, is really foundational to business. You think about the U.S., it's among the lowest cost natural gas markets in the world. And I'm curious how you see that evolving, of course, as we continue down this path.
Yeah, we couldn't be happier where our production facilities are located. Not only do we have some of the best reserves of natural gas, cheapest cost of production, but a very supportive legislative environment around being able to capture and sequester carbon. So it really puts us in an unusual position of being able to produce in large quantities decarbonized ammonia that the entire world is going to need. Ammonia by itself is NH3, so there's no carbon embedded in the molecule. Very clean fuel. So it can either be used to transport and store hydrogen or fuel in its own right. And it really is going to be an enabling technology as the world goes through the energy transition.
I also do want to talk about fertilizer and the prices that we're seeing. Of course, they've fallen from that cycle that we saw back in 2022, but you compare that to pre-pandemic levels, we're well above where we were in 2019 and before. And I'm curious how you're seeing farmers respond to what really has been a price shock.
Yeah, you know, there has been obviously some consternation on the part of growers. But I would also say coarse grain prices have responded as well. So those things to move a bit in concert with one another. And fertilizer really is a global commodity. It is the same chemical formulation whether you make it here or in Russia or in the Middle East. And it is the sort of the last ton of production that gets bid in that sets kind of the global pricing. So we're not establishing pricing. It's sort of the market moves as it goes. And in general, even today, there is ample opportunity for farmers to make a good return on the investment that they make in the field.
And before I let you go, I am curious, with that global perspective in mind, I mean, what does the supply-demand balance for fertilizer look like right now?
Yeah, right now there is ample supply. We expect as we go forward, it takes about 4 years to build a new fertilizer facility. So you can look around the world and get a good perspective of how much new capacity is coming on. There are places in the world that are running short of gas, Trinidad and challenges in Europe. So netting off is likely to close. The normal demand growth rate in the industry is going to be higher than the amount of new capacity being added. So we expect that supply-demand balance to tighten over the next couple of years. That sets up a really constructive dynamic for our business.
Well, Tony, I'm still not a scientist, but I did learn a lot, so I appreciate that. Great to see you in person.
Thanks so much for having me. Appreciate it.
That, of course, is Tony Will. He is the CEO of CF Industries. Let's get a check on these markets. About an hour into the U.S. trading day, we're with Abigail Doolittle.
So we're looking at the possibility of a third down day out of the last 4 days. Yesterday, of course, have a gain before that. 2 declines. The S&P 500 right now down slightly, down about 0.1%. One question. Will it be a value or a growth day? Yesterday, of course, we had this big rotation into growth. After a mini rotation into value, lots of uncertainty. Yields kind of yawning around it. The 2-year yield really not doing anything. Crude oil about 0.3%. And then take a look at the big story here. The yen dollar down up 0.6%. The yen down 0.6%. Basically at levels we have not seen in a very, very long time. Let's take a look at a long-term perspective of the yen dollar. So Years ago, all you would hear about was how strong the dollar was relative to the yen. I'm talking about the 80s, so we are at a level last seen in that area. And then we had this period of strength for the yen against the dollar going back to, let's call it right around the GFC. The yen as a haven currency, so money flocking into the yen, interestingly at that time also into the dollar. That risk-off period. But here we are hitting up against that resistance. Take a look at this monthly RSI or momentum indicator, Katie, going to the downside, maybe suggesting that that resistance will hold and we will start to see the yen strengthen. Of course, there is some thought that the BOJ, that there could be some tightening later this week. As for some beneath the surface, FedEx up nearly 15%, its best day in 2 years. They, of course, beat on a slowdown in the decline of their parcel business. They're also talking about the possibility of a divestiture of business. They're consolidating some of their other businesses, a $2.5 billion buyback. Investor Rivian soaring up 27.4% on the $5 billion deal with VW to create EV vehicles and software. And then the odd stock out, and this one on the day, but it's an important one, Katie, is the third largest weighting to the S&P 500 and the NASDAQ. NVIDIA, after being in a over 3 days, yesterday up almost 7%, now down. Technically, it does look like we could continue NVIDIA take a little bit of a breather, maybe some folks taking a second pause or thought, I should say, around the high craze.
Yeah, that volatility that we're seeing in NVIDIA really striking. Appreciate that update, Abigail Doolittle. And as we head to break, let's take a listen into Ares co-founder Michael Arrighetti, speaking now at the Bloomberg Invest Conference in New York City.
About rumors specifically, we've been quite acquisitive, as you know. So if you look at our growth, 20% of our growth over time has come from some kind of M&A. I have a very strong view that these markets will continue to consolidate. And the reason that they're going to consolidate is, from the manager's perspective, there's huge benefit to scale. Right? The larger we get, the more people we can have. The more people we have, the more deals we can do. The more deals we do, the more information we get. The better information we get, the better our investment performance, and then we get more AUM. And so there's this virtuous circle and cycle that scale creates in private markets, and people are beginning to see that. Investors are putting more of their dollars with fewer managers because they see that opportunity for outperformance.
All right, that, of course, was Michael Arrighetti of Ares speaking with Sonali at Bloomberg Invest, and you can continue to watch that conversation on your terminal at LiveGo. This is Bloomberg.
Maybe 20 managers to try to drive efficiency and deeper partnership. And the markets are global and globalizing. So a lot of the things that we learned, let's say,
and we just apply AI.
Because there's the people more refined, right? 6 pages. So aspect to it, to make a judgment of the entrepreneur, who they are, what they and then the final piece gives us a sense of judgment that
Volatile day on Wall. Numbers casting down. Launching with Bloomberg News now. The podcasts. Bloomberg News.
Bloomberg. Software company. Now we say
changes everything.
Well, it's time now for our daily Wall Street Week conversation. And Evercore founder Roger Altman was among the executives who met with Biden last month. Altman spoke with David Weston about the sentiments among Wall Street insiders regarding the government and the economy.
I served twice in the Treasury at length, and part of my responsibilities involved interacting a lot with business. And the business community always wants certain change. That's the nature of that interaction. There'll never be a period where business says, we give you a score of 100%. We like every single thing you're doing. It's all, we're great. They'll never do that. So it's the nature of it for them to have some things they'd like to be changed. Now, I think you put your finger pretty well on it. The macro from the business community's point of view is very good. As you say, at this very moment, major stock indices are around all-time highs. The last few weeks have been a pretty major round in fixed income markets. The yield on the 10-year Treasury is about 40 basis points lower than it was 4 weeks ago. That's pretty big change. And we're still seeing consistent growth, as I mentioned. So the macro, from a business community's point of view, is good. Yes, there are a lot of people in the business community that think the Biden administration is doing too much from a regulation point of view. They don't like the stance of the FTC and the Justice Department, for example, on antitrust. Some, of course, in the energy industries don't like some of the regulation that the administration has promulgated in that area. However, sitting CEOs, David, of major companies do not, as a rule, endorse presidential candidates. That's not new. They don't historically do it. And by the way, today, most boards of directors of major public companies wouldn't permit the CEO to make an endorsement of a presidential candidate. So they're not going to take a position publicly one way or the other. But they look at the Trump agenda. I think a number of them don't like it. And let me be specific. The two, the New York Times published, I thought, quite a helpful and concise summary of their understanding of the Trump agenda about a week or 10 days ago on the front page of the Times. And the first two items were deportation and tariffs. So let's talk about those. And we'll start with tariffs. So President Trump is proposing a 10%, a new 10% tariff on all imported goods, with a 60% tariff specifically on goods imported from China. The impact of that, according to the Peterson Institute for International Economics, which is nonpartisan, would be $1,700 per average American family. Think about that a minute, $1,700 a year. Now, if you want to ask, and I haven't done this, but I'm pretty sure I know the answer, the CEOs of companies like Walmart or Procter & Gamble or Costco or Home Depot, whether they think that's a good idea, their answer is going to be in private. Absolutely not. Then, on deportation, President Trump is proposing to deport a little over 11 million individuals currently living in this country on an undocumented basis. Well, the problem is that most of the adults, I'm sure it's about 80% or 90% of the adults in that cohort are working. Now, we have a 4% unemployment rate today, and many corporations say publicly that they can't find enough workers. I recently heard from the CEOs, for example, of Marriott and Bechtel. So the idea of taking, let's say, 8 million workers out of the country when we have a labor shortage already, an economically destructive one. And if you were to ask in private CEOs what they think of that, most of them, I can't say all of them, would say, no, that's a terrible idea. So in terms of the Trump agenda, I don't think there's a lot of support. Although, of course, it's a big community, the business community. There are some very conservative elements. And I'm sure there are quite a few who like the overall ideology of President Trump. But in terms of the economic platform itself, I don't see much support for it.
And that was Evercore's Roger Altman speaking to Wall Street host David Weston. Now coming up, the House of Arnault. We'll explore how French billionaire Bernard Arnault built his luxury empire and why he's not done shopping yet. This is Bloomberg.
Markets. Romowitz and Anne-Marie.
And wherever discussions. Market's too optimistic. We stop. And France.
Good morning from our world headquarters.
The market. Bloomberg.
French billionaire and LVMH founder Bernard Arnault has built an empire of opulence with 75 brands ranging from Louis Vuitton to the iconic champagne Dom Perignon. But he's not done shopping yet. Brad Stone, he is the editor of Bloomberg Business. He sat down with Arnault at LVMH headquarters in Paris, and I'm pleased to say he's in New York right now. Join us. It's great to see you.
Thank you. Likewise.
Let's talk about just how wealthy Arnault is, because you have a chart in the article that shows that his wealth is on par with Elon Musk and Jeff Bezos, but it feels like hear relatively a lot less about, of course, Arnault.
That's exactly right, and it's why we featured him last month's Bloomberg Business Week. Arnault has actually been the wealthiest person in the world for most of the year, according to the Bloomberg Billionaires Index. It was only until the French elections and the decline in the French stock that his wealth fell a little bit. I think it's around $208 billion. He will be just but I think you're right. I mean, his story is relatively poorly understood, particularly compared to tech titans.
Well, help us out here. Tell us about LVMH and how he actually built this empire. I have to say that it was 75 brands.
It is. And look, a lot of them are going to be very recognizable. Not know the name LVMH, but they know Christian Dior, Louis Vuitton, Bulgari, Tiffany & Co. They bought during the pandemic, Tag Heuer. It is a massive conglomerate in all elements of luxury and high-end travel and watches, fashion. He has really taken, unlike the tech titans who have invented our future, he has taken elements of European tradition in the past and brought them all over the world.
He must have a gorgeous wardrobe. One to imagine. But tell me a little bit about what's next, because I mean, as I said, not done shopping yet.
Right. In fact, actually, just today they announced an acquisition of Suiza, this high-end Swiss intricate clockmaker. We reported in the story that he has acquired a small personal stake in Richemont, which is the owner of Cartier. It's significant because this is how he's operated over the past few decades. He is not the founder of any of these companies. I mean, he's an incredible operator. He's got an amazing vision for luxury, but he has acquired all these brands and brought them together in this conglomerate. And it has often started with these small stakes that he has purchased in companies, mostly successfully, but in cases like Gucci and Hermes, he is failed. And so he has said, you know, with regards to Johann Rupert, the owner of Richemont, that wants to help him remain independent. But clearly, this is a 75-year-old guy. Everyone talks succession, but he has not done empire building.
So we're going to get to succession, but I am curious. I mean, we talk about him acquiring, but does he ever sell off stakes?
He has. It has been few and far between. The retreats, you could probably count on one hand, but the number of times he's acquired and added to the empire, I mean, that's the through line.
I only have a minute left with you, but this quote really stuck out to me. I have 5 members of the family working in the group. Let's see if one of them has the capacity to take over.
It sounds like a French version of Succession, but there are some differences. I mean, his kids are extraordinarily accomplished. They are all in the business. They run different parts of it. And he thought a lot about succession, and not just how to preserve the company through generations, but how to enforce kind of civility amongst his kids. I mean, by all reports, they get along quite well. But certain things, like they're all equal owners of one of the holding companies, and they have to agree for a period of 40 years about all major strategic decisions.
Well, it's going to be a fascinating story to follow. Of course, a fascinating story to read on print and online. Our thanks to Brad Stone of Bloomberg Businessweek. And be sure to pick up the latest copy magazine. Of course, that's out on newsstands right now. Let's take a quick check of these markets right now. Of course, on this Wednesday, the S&P 500, we're pretty much treading water. You can see pretty much unchanged, maybe down a little bit when it comes to the S&P 500. A little bit of a different story when it comes to the NASDAQ 100. Big tech stocks finding their footing here, up about 0.2%. Can't say the same for those small caps. Now coming up, much more from the Bloomberg Invest Conference that's in full swing in New York City, but that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
finance and money. Computer things that they
literally, I would be Googling terms. That I could do that. My dad constantly with my team. Mark in under 30 seconds. Rambling on, and they test. And at Google, clearly, which shoots
new technology.
you.
Let's reach. Moment news breaks. 24. Everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde, Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's at Bloomberg Invest, but this is Bloomberg Technology. Coming up, full EV coverage ahead. Rivian and VW forge a $5 billion partnership. Plus, the Supreme Court clears the for the White House communicating freely with social media companies to seek the removal officials see as misinformation. And we go live to our Bloomberg Invest Summit, where heads across the financial industry break down the most pressing issues facing investors. Right here, right now, let's get right to our top story, and that is a deal between Rivian Automotive and Volkswagen. The shares really taking off. In after hours, they were even higher on Tuesday night. Rivian, as it stands, is trading at its highest level since. If it closes at this level, it will be the biggest gain one day on record, although I'd caution the IPO in November 2021, we did see swings in excess of 50%, and it did close near those levels. This is a company that I've covered very closely for years. I have to be honest that I didn't see one coming. Basically, in the first instance, Volkswagen will invest $1 billion to Rivian in the form of a convertible, unsecured or unstructured note due December 1st of this year, and then commits to investing $1 billion in 2025, $1 billion in 2020. But we don't know where the share price will be at that time of Rivian, right? In return, they form a JV. Volkswagen gets access to Rivian's technology, both software and some elements of the drivetrain or power. This is a big one for the EV industry. Let's get into detail with Stephanie Streety. Stephanie is the Director of Industry Insights at Cox Automotive. A quick disclaimer. Cox Enterprise, which is the parent company of Cox Automotive, is an investor in Rivian, and Sandy, CEO of the Cox Family Office, a member of the Rivian Board of Directors. But we have Stephanie here for her expertise on this company, these companies, and expertise on this industry. So let's start with the basics. Stephanie, your reaction to this deal?
Well, Ed, I think what you hit it when you said this was an unexpected announcement, and it's making waves through the industry. And I think it's huge. It's a breakthrough moment for Rivian. As you know, we've been following Rivian also, and although they've made some really good progress in the market with their products, with their customer experience, becoming profitable has been a big issue. And so this investment is huge. It's going to help them really get on that road to profitability, especially as they're trying to launch the R2, which is a very critical vehicle for them in terms of affordability in the marketplace and kind of in that segment where there's more volume. So I think this is a huge moment. And I think for VW as well, right? Having access to that cutting edge technology. And I think the opportunities for global expansion for both companies is really, really going to be a positive for both.
When the news broke last night, I took a few phone calls, and what was so interesting is very quickly, a few folks close to Rivian and at Rivian and elsewhere in the industry would point out to me, Volkswagen's software strategy has not gone that well. They kind of formed Cariad, the unit and the Cariad platform. I'm told they face some major issues. How much do you think this is sort of Volkswagen reacting to that versus actually pretty much an acknowledgement that Rivian is good at software?
Yeah, I think it's Volkswagen's, acknowledging that Rivian has this cutting edge technology and it's going to really help them to scale. And I even think about broader, like if you think about the Chinese automakers and just kind of what the penetration that they've had and the technology that they've had. So I think this is going to really help VW, not only in the North American market, but globally as well. So I think they really saw that this is something that's really going to help their brand and really help them scale faster and more efficiently.
I have to be honest with you, Stephanie, Rivian's track record in joint ventures is not good. You know, I've been covering this company since the moment that RJ was on stage the LA Auto Show and revealed to the world that he had a pickup and SUV. And within 3 or 4 years after that, the Ford JV had been and gone. Ford invested $500 million in Rivian, and then they planned to build a Lincoln together. They scrapped it. They planned to build a joint venture EV together. They scrapped it. The Mercedes relationship on commercial vans lasted 3 months. How much of a retail is that for Volkswagen?
No, I definitely think they need to be cautious, especially in these two distinct companies, right? And they need to constantly make sure that their strategic goals are aligned. So I think to your point, it's going to be, be a long, bumpy road, but I think they're going to have to be very focused on making sure they're aligned. And kind of what you just mentioned about some of the failures in the past. So I think it's definitely a risk we need to closely follow and make sure that they're aligned.
You and I spoke very recently about market share. So Rivian is going to come to market in 2026 with the R2 and probably will be a competitor for existing models like the Model Y. But at the same time, Tesla is ceding some market share in North America and other markets as more models in the market. How are you tracking that and how do you see that going?
Yeah, I definitely see, it's all about product, right? Customers like new product, and with Rivian having the R2, R3, adding more vehicles into the marketplace, I think that's going to really, in terms of Tesla not having anything other than recently the Cybertruck, and no definitive timeline for the affordable vehicle, I think Tesla definitely has more and more competition, and not only with Rivian, but other makes as well. So I definitely think Tesla is really going to need to get some product into the market to maintain that share that they've had for many, many years.
I've got a stat for you. For the 12 months through May, Tesla sold 618,000 electric vehicles in the United States. All of the other manufacturers combined sold a BEV 597,000. So at some point, I think we expect that to cross right. The question it raises is one that RJ Scaringe has argued with me about over years. He says that this isn't an issue of interest rates or tepid consumer appetite towards EVs generally. He argues we need more models. The more models we have on the market, the better the market will be. Do you share that thesis?
Yeah, I think we need more models, but more affordable markets, right? If we want mass adoption, we need to have more affordable models. Price is the top for consumer adoption. And so as we have more and more affordable markets or models in the marketplace, that will help with adoption. So I think I agree with that. More models, but more affordable models is going to be critical.
Cast your eye to the future. What happens with Rivian, Stephanie?
I'm betting on them. I think they have a lot of good brand equity in the marketplace. I think the VW partnership is really a lot of great potential. And I think their collaboration can evolve this whole connected software-defined vehicle technology. And so I think it's promising. But like we just mentioned, I think they just need to be careful that their strategic goals are aligned and they're step to ensure success.
Stephanie Valdez, Treaty of Cox Automotive. I just appreciate your insight, not just to Rivian and VW, which I think caught us by surprise, but the industry at large as well. Thank you so much. Okay, let's turn to some breaking news that's come out in the last hour. The Supreme Court cleared the Biden administration to communicate freely with social media companies in an election year, which rules that bolsters the government's ability to seek removal of what officials see as misinformation. I want to bring in Bloomberg's Kaylee Lyons out of Washington, D.C. Kaylee, I saw the headline cross and I've just read the intro to you, and I'm trying to understand the mechanics and bigger picture of this story. Explain it to me.
Well, Ed, this is a win for the White House. You're exactly right in that it leaves the door open for them to communicate freely with social media companies about content that they see as misinformation that could potentially be harmful to the public. This case all started with around the administration's activity with social media companies and trying to control information related to the COVID-19 pandemic and the 2020 election. And the plaintiffs in this case essentially argued that they overstepped the constitutional bounds of the right to free speech. The thing is, in this ruling, which was 6-3, the opinion written by Justice Amy Coney Barrett doesn't actually talk about the merits of the case. It's about standing. They essentially argue that the plaintiffs, which included 2 states and a handful of residents within those states, not have the standing to be bringing this case because they couldn't demonstrate that they were directly injured by defendants, which of course in this case is the Biden administration. So this is kind of similar to the mifepristone ruling earlier this month, where they didn't actually decide necessarily definitively on access to that abortion pill. It was just that the individuals, people that brought the case did not have standing, which is why they ruled in favor of keeping access to it. So it leaves the door open, Ed, for this question to still be raised again in the future, technically, plaintiffs who may have more firm ground to stand on.
There's an interesting case of what happens next. Is per the ruling, the administration could go out and engage with the company and talk to them freely. That is the top line of the story. Whether they do or not remains to be seen, because in October there was a temporary halt per the court. And as we keep pointing out, it is an election year. What does Biden and co do?
It's an excellent question, Ed, and we're just going to have to wait and see. Of course, all of this is going to be viewed through a political lens. There is a huge conservative thought in which the ultra-conservative justices who dissented in this decision, Thomas Alito and Neil Gorsuch, that do think the administration would be violating the rights of free speech, specifically restricting the speech of the right and of more conservatives. And this is something that we see trickling through all through American politics at this time, all the way up to the presumptive Republican nominee Donald Trump. So these decisions for the administration to be engaging with social media companies on what content can be propagated and seen by the people is very much politically tinged. And I would just note, Ed, it is just about what the administration does, but what social media companies themselves do. And I would point you to the fact that we are still waiting for ruling this term from the Supreme Court, so it should come within the next several days, on laws in the states of Texas and Florida that restrict the ability of the social media companies themselves to police misinformation. The court has yet to rule on that particular question.
Bloomberg's Kaylee Lyons, co-host of Balance of Power. Watch Balance of Power, and our Bloomberg Technology audience should as well. Thank you so much. Okay, coming up on this show, we're going to be joined by Jack Mallers, CEO of Strike, to discuss the launch of the global Bitcoin app in my home country, the United Kingdom. I'm also taking a look at shares of, guess what? Nvidia, actually softer again, down 2.7%. Let's call it a roller coaster ride. We were down 3 days straight with a technical correction. We rebounded, and now we're down again 2.5%. There's the annual general meeting taking place straight after this program. Usually it's not a news event. Usually it's not that closely followed. But I wonder if this it may well be. I'll be on hand, and so will Bloomberg's Ian King. Be right back. This is Bloomberg Technology.
Rodriguez. I was thinking 2 decades. This is the deal.
If I knew what was going to be.
My wife. The lawsuit. That deal. The deal.
Wow.
Okay, time for talking tech. And first, CME readies for trading via the cloud. Google will work with the exchange operator to build out a new network that would move futures and options trading to the cloud. The two firms will develop new facilities next to CME's existing data centers, with construction due to start later this year. Plus, SoftBank's AI ambitions start with healthcare founder Masayoshi Son set to host a panel with doctors and medical professionals on way to harness AI for the sector. One company he's expected to bring up is Tempus AI, a US startup that's by SoftBank that analyzes medical data. And South Korean chip makers are about to get a financial boost. The country is going to inject $19 billion in support to build out the semiconductor industry. Starting in July, eligible firms could tap the program at the market's lowest rates. As countries worldwide are moving to make chips locally due to global supply chain concerns. Those are some of the news stories we're following. I want to get to the world of crypto. The global Bitcoin app Strike has now launched in the United Kingdom. Delighted to say that Strike CEO Jack joins us now here on Bloomberg Technology. I found this so interesting. Without boring you with it, I moved to America 6 years ago, but at that time when I was covering technology, London in particular, I would say, and the consumer base was much more focused on fintech and crypto than perhaps other areas of technology. 6 years on, you guys have made the move to that market. Why?
I think simply put, we view Bitcoin as a paradigm shift. Bitcoin is the first time humans have come across perfect money as we know it. And the world needs a global Bitcoin company that's going to help them and provide them the financial services to adopt it. And so I think we are the most accessible, global, and most performant Bitcoin business in the world. Like compared to a Coinbase, we don't focus on 1,000 other cryptos in our own blockchain stuff. We just make sure that people have an amazing experience adopting the best money of all time. So that's why the people, they need Bitcoin, brother. Come on.
Well, Jack, I find that interesting though. So if you think about Strike as a platform or an app, call it what you will, you can do several things, right? You can buy and sell Bitcoin. You can make Lightning payments. There's other functionality. But is there a specific use case that you think people of the United Kingdom will use most? In other words, was there a clear demand for a specific function?
Yeah, well, I think Bitcoin's the best performant asset in the history of our species. And so we want the best experience. That's kind of our baseline, and we've become that. And that's why we've been on such a tear expanding globally. Everyone wants our product. I think that where we are in this market cycle, given the geopolitical backdrop, the macroeconomics, and this upcoming election, is people need to buy it. There's going to be a lot of new capital that is going to come into this asset class. It's my prediction. I've told you, I think Bitcoin's going to land somewhere between $250,000 to $1 million per coin over the next 12 months or so. And so that is the highest volume product we have, is people that call us and say, I need this thing. Can you help?
One of the headwinds or challenges to what you've outlined, and yes, you've outlined it before on the kind of direction of travel of Bitcoin, is regulation and oversight. You know, we're focused on the UK. It's just one market in the 100 or so you operate in. But what was that experience like launching in the UK, having to work with post-Brexit regulators who, as we've discussed a lot on this show, Jack, they tried to be strong, right, particularly on newer areas of markets or nascent technology?
You know what, Ed? Listen, I think that everyone can agree, both regulators and us, there's a lot of work to do on education, and there's definitely efficiencies and progress we can all make. But the fact that we're Bitcoin only, can say, was huge. No one is diligencing the fact that we're creating our own tokens. If something is a security, if I'm acting unethically, I build and sell the most honest, performant money in the history of species. And it's a very simple business. It's a very honest business. It's a very moral and integral business. And so it's rather simple. While other businesses are retracting from markets and getting sued by regulators, we're not. And I think it has a lot to do with the fact that we're built on principle. And I founded this business because I think Bitcoin changed the world and I want to help. And so with that context, it was fine. It was fine. And pleased with the launch.
Jack, really quickly, we never really talk about Strike as a company. Are you going to be employing people in the UK? Have you grown your staffing there? Have you got yourself a nice office? What does it look like?
Yes, we will. Strike's growing a lot. We, though, take this approach where we have two businesses. We have our operating company, and then we have our treasury business, and we buy as much Bitcoin as we possibly can. So Strike's a profitable, growing business, and we sweep those profits into Bitcoin. Over 90% of our treasury is actually in Bitcoin. So the cost of capital is against Bitcoin. So we only deploy capital into things that we think can outcompete Bitcoin, which is at an annualized of 63% over the last 10 years. So we're delicate with how we invest, but of course, I mean, Strike's a money, and we're going to keep pouring capital into it as long as people keep needing Bitcoin and us.
Strike CEO Jack Mallers, appreciate your time as always. Thank you so much. All right,
Thanks,
coming up on Bloomberg Technology, we're going to be joined by Richard Robinson, CEO of Robin AI, to discuss the company's new product line and its role in the legal AI race. A quick look at shares of Apple as well, up more than 2%, an upgrade at Rosenblatt. Basically, a simple argument as they upgrade to buy from neutral. They see Apple as having the potential to take market share in AI because of its privacy focus in Apple Intelligence. Be right back. Bloomberg Technology.
Real yield.
The intersections of
C-suite. Bills to Bedford. Efficiency, innovation. Numbers.
Our first job.
Your officer. New season.
Time now for our weekly AI in Action segment, and today we're looking at the field of legal. Robin AI works to enhance efficiency by automating much of the due diligence process that's involved in M&A. The company also announced their new product line, Robin AI Reports, this month. Delighted to welcome back to the program CEO Richard Robinson. I think you and I have in the past, like I am a student of the law, went to law school, a family of attorneys, and goodness, I didn't become one. but I get the point of Robin AI. Let's start with the product line, the reports element. What is it, and why did you feel the need to bring it out?
Yeah, when I was a lawyer, one of the most painful things I ever had to do is something most lawyers spend their time doing, is working through hundreds and hundreds of contracts, trying to summarize those agreements for our clients. People want to know what's inside all of these documents before they do a transaction. And unfortunately, in the past, we've just never had technology to help us. And so we employ arms of associates through the night, week in, week out, to basically go through these documents line by line, looking for risks that they can report. And so we said, why can't we build something that uses AI to do that for us? That's essentially what our reports product does.
The field of legal AI is widely discussed. We recognize a two-horse race, basically. You have an association with Anthropic. Yeah. There is a legal AI named Harvey we've had on this program, closely aligned to OpenAI. In fact, I think OpenAI made an equity investment in them. Yeah. You going to win that race?
Of course. I mean, we are legal AI for business, and Harvey and OpenAI are really focused on law firms. And we think that's interesting, but what motivates us is trying to help companies like Bloomberg, like General Electric, like PwC, helping them do their work faster, unleashing them to grow in ways that they can't today, because in the absence of the right technology, managing legal risks is just time-consuming, it's expensive. But if you use tools like ours, we have customers saving 90% of their time.
Could I have some data then? How many M&A transactions has Robin AI facilitated, for example?
Yeah, I mean, we've been involved, it's worth saying, we've been doing this for nearly 5 years now. I mean, we support M&A transactions. We support about 1,000 transactions a month already for some of the world's biggest companies, for 5 of the Fortune 500, for 7 of the top 100 funds in the world. We've been really working with business since 2019, before LLMs, to help them use AI to accelerate deals. And working with Anthropic has helped us expand our reach and focus.
Robin AI CEO Richard Robinson, it's great to have you back on the program and keeping us up to date. Thank you so much. Coming up, Micron's out with earnings data today, and we have all the details on what to expect next, plus getting a bit hands-on with some of the tech. We're also looking at shares of Paramount. A headline out this morning, discussion about Paramount looking at global options, global partnerships for streaming services. The song continues about the future of Paramount, its assets, ownership, and what happens. But for now, the stock's 0.3% in the session. It's a story I'm sure we'll continue to track in the next few weeks, because from an M&A perspective, or even just a streamer perspective, is something that I know our audience really cares about. Stay with us. A lot more to come on the show. This is Bloomberg.
When I was 36, with my family. American company. Very curious. Trying to should be the and people we believe work or and we wants to do I think so. Been running this company for
we got hands-on with NVIDIA's AI accelerator, the H100.
But this little one is pretty important too.
Micron's HBM3E, a high bandwidth memory chip used to power AI workloads. The chip is revolutionary for the industry because it allows for high-speed data transfers and more capacity bottlenecks in developing AI. Producing the chips is complex, but the payoff is great for Micron, Samsung, and other players. The Micron chip's smaller and thinner than a penny. It's key to training LLM generative AI. Basically, the more data you can serve up more quickly, the better the model gets. There are 8 layers of DRAM or memory stacked on top of each other. Each layer is 3 gigabytes, so together you get 24 gigabytes.
The reason that Micron's HBM3E or high bandwidth memory is important is that in the AI context, it solves for a problem called the memory wall.
To train the LLM, ChatGPT, for example, you need to be able to process a large amount of data very quickly. As AI workloads increase and NVIDIA releases new higher performance AI chips like Blackwell, the memory demands also increase. This year, Micron also released a higher capacity chip that stacks 12 layers of DRAM, 36 gigabytes of memory. The two look identical when placed side by side. Each layer is made to provide more memory without taking up more physical space.
The next in our series of getting hands-on with semiconductors, a quick look at Micron shares, softer by 0.5 percentage point. Micron is scheduled to release its third quarter results after the market closes today, and a big focus on when's the AI story going to hit in top-line growth. Here with expectations is Bloomberg Intelligence analyst Jake Silverman. You know, we focus on HBM3E or high bandwidth memory, but that's where they're looking as well, right?
Yes. Certainly. Investors are definitely going to be looking at expectations for high bandwidth memory growth for Micron, both in fiscal 24, but also looking at calendar 2025. Micron's management has what we think is a pretty reasonable goal of reaching mid 20% bit share for HBM by 2025.
So historically, Jake, you know, memory is a kind of highly cyclical and almost commoditized piece of technology. Does AI change that? Because in the context of AI accelerators or GPUs, we just talk about this addressable market in an exponential growth curve.
Yeah, so it's definitely different. You definitely don't have the same commodity-like cycles, or same commodity-like expectations for HBM that we would typically see with memory markets. This is definitely a secular trend that's really being driven by AI. And in terms of HBM capacity, they're actually supply constrained right now, memory suppliers. So they're getting margin advantages right now relative to standard DRAM. So as HBM continues to grow in terms of revenue, should also lead to margin expansion for memory suppliers as well.
I'm really interested in how much Sanjay Mehrotra, the CEO, gives us a crystal ball into the future, because in the first instance, HBM3E goes to H200 generation of NVIDIA's AI accelerator, but in the future you have Blackwell, will tell us how much money they make. But I'm interested in the landscape. Samsung is looking at high bandwidth. You have SK Hynix. Where does Micron sit in that competitive field?
Yeah. So SK Hynix has been the leader. They've really been sort of the sole supplier to NVIDIA's H100 chip. But as we look at H200, Micron seems to have gained a decent amount of share there, and we're expecting Micron to gain share into their Blackwell chip as well. But that's not the only opportunity for Micron as well. They can continue to gain share in other GPUs, accelerators. There's a lot of options. AMD as well as one example. Google's TPU is another opportunity. All of those require high bandwidth memory.
There is some other stuff that we should talk about. I mean, DRAM generally, NAND or flash memory. What are some of the other important areas of Micron's business? Yeah, so there's also, staying on the topic of AI as well, aside from HBM, they actually still have products that are related to AI growth. High capacity memory modules for DRAM, enterprise SSDs, all of those are starting to see an inflection related to AI revenue. But generally speaking, the market just looks a lot healthier. As we think about supply constraints and limited capacity this year and potentially into next year as well, we're expecting pricing to continue to increase for non-AI related products for Micron. Okay, put you on the spot. What are we expecting then? Give me the top line growth numbers and where AI sees the print this evening.
Yeah, so we think that Micron will report above the mid-range of guidance for both revenue and earnings. And as prices continue to increase throughout this year, that could lead to upward estimate revisions across the street for this year and into potentially next year as well.
You are new to the show, Bloomberg Technology, but we're grateful to have you. What are you working on in the field of memory right now? It's a big coverage area. We talked about how historically it behaves like a commodity, and it's also a global industry as well.
Yes, we've already done an HBM sort of market forecast that goes out 5 years to 2028. So that's something that we're continuously tracking and looking at. But on top of that, we're also just looking at for non-AI related products, what capacity is going to look like throughout this year and next year to try to understand what that supply-demand balance looks like. So that's just ongoing work that we're continuously looking at, how it impacts pricing and ultimately demand for the company's products.
Bloomberg analyst Jake Silverman, as you can tell, I could talk about the memory market all day long. Thank you. Now, Bloomberg Invest is underway in New York. Let's get to the live event. Our very own Caroline Hyde is sitting down with Canvas Ventures' Rebecca Lynch and Lycos Global Management's Nick Laster.
And general partner at Canvas Ventures with Bloomberg's Caroline Hyde.
Either end of the spectrum here when it comes to private investing, going into public investing. And I want to sort of launch straight in on what on earth it is like to be writing checks at either end at the moment. So with Lycos, of course, Nick, you are looking much more at the late stage rounds, IPOs, maybe just very recently gone public companies. And then Rebecca, with you, you're more in the Series A, the Series B. So Rebecca, kick us off.
Yeah.
Is it competitive?
It is competitive. But for how we approach the market, we really have a lot of runway in front of us because we spend a lot of time on our core investment theses. And now with Gen AI, which who hasn't heard of that, right?
I've never heard of it.
Never heard of it. There's so many really interesting opportunities from